Alright, what if I told you there's a single indicator that doesn't just show you the trend, but also reveals early momentum shifts, gives you precise reversal confirmations, and even builds dynamic zones of support and resistance, all visually, and all in real time? Sounds like a cheat code, right? Well, it exists. Once this indicator is on your trading chart, it's like turning on night vision in a foggy trading market. You're about to see structure, momentum, and trend clarity in a way you've probably never seen before. Let's break it all down step by step so you can actually use it effectively in your trades. To get started, open up TradingView. That's the charting platform I'm using here. Once you're logged in, open up the chart of any asset and time frame you usually trade. Now, click on the Indicators tab. Here, search for Gradient Trend Filter and select the one by ChartPrime. When you add it to your chart, you'll see exactly why this tool stands out from the other indicators. Right away, you'll notice the bold trend-following line, what I like to call the midline. It changes color depending on trend direction, green for bullish trends, red for bearish ones. It's a simple but powerful way to instantly gauge which side of the market you're supposed to be on. Then you'll start noticing those small orange diamonds. These are major. They signal confirmed trend reversals based on internal calculations, and more often than not, they appear right around the shift in market sentiment. But the real magic lies in the gradient cloud that forms around the midline. This cloud isn't just for show. It visualizes momentum in real time, with its colors often shifting before the main trend line does. So if its color is green and suddenly that indicator starts shifting its color to red, take note. That's often a first warning that bullish momentum is fading. On the other hand, if you're in a downtrend and the color of the cloud of the indicator changes to green before the midline color changes, just like we can see over here, the buyers might be getting ready for a big move. Beyond trend clarity, this cloud also behaves like dynamic support and resistance. In an uptrend, it helps spot pullbacks and often acts as a support area where the price can bounce and continue higher. In a downtrend, it tends to block price rallies and push the market back down. This makes it very useful for finding good entry points, especially if you trade pullbacks. Now let's go into the settings of this indicators. You can access the settings from here.
Do you feel like everyone around you benefits from artificial intelligence, but you have no idea where to start? Don't wait any longer. Start today. Our free trading bot is simple to use, powered by artificial intelligence, and can earn you up to 1% profit every single day. Over 500 members have already joined. Click the link below now to get free access. This is your chance to harness the power of AI and take a step toward a financial boost.
Open up the indicator settings and go to the Inputs tab. By default, the source is set to close, and that's generally good for most traders. But the main thing to pay attention to is the length input. The default might be something like 25, which works well for general swing trading. If you prefer a slower, smoother read, you can increase that number. If you want it to react faster, say, for scalping, you can dial it down. But just be aware that a shorter length might catch more noise. It's all about getting the right balance, based on how quickly you want the signals. In the Style tab, you can adjust how the trend line looks, modify the color and size of the orange diamonds, and even choose whether or not you want the values displayed on the price scale. Everything's customizable, but the default visuals are pretty clean, so you don't need to change much unless you want a specific aesthetic. So how do we actually use this indicator to trade? Let's walk through a few example setups to show how powerful it can be when applied correctly. All right, let's break down this first buy example step by step. First, look at the trend line. It is turned green. That's our first condition. A green line means the indicator sees the market in an uptrend. Now, check the gradient cloud. It's also green. That's condition number 2. When both the trend line and the cloud are green, it confirms the overall bullish trend. Then, watch closely that we get an orange diamond on a green candle. That's condition number 3. The orange diamond is a confirmation signal showing the momentum is now clearly shifting in favor of the buyers. So once all these conditions line up, green line, green cloud, and the orange diamond on a green candle, that's our setup to enter a buy trade. For the stop loss, you can place it just below the cloud zone, or even better, under the most recent swing low. And for take profit, either go with a fixed risk to reward ratio like 1:2 or 1:3, or use the midline as a dynamic trailing stop to ride the trend. Now let's move on and let me show you one more way you can use this indicator to open a buy position. So first things first, check the trend line. It is turned green, which tells us the market is currently in an uptrend. That's our first condition. Now look at the cloud. It's also green, and that's condition number 2. This confirms that both the trend line and the cloud agree on the bullish direction. Now here's where it gets interesting. As the price is trending upwards, we see it begin to pull back toward the cloud. This pullback is a normal part of market movement, and this is exactly what we want to watch for. Once price touches the upper band of the green cloud, that's our dynamic support zone. We start paying close attention. That's our third condition. The cloud acts like a cushion here, a zone where buyers may step back in. Then we get the bounce. Right after touching the upper edge of the cloud, the price rejects it and pushes up again with a strong green candle. This bounce from the cloud is our entry trigger. It's a clean sign that buyers are defending that support zone, and it's time to open a buy position. So right here is where we can confidently enter a buy trade. Just like before, stop loss can go just below the cloud or the recent swing low, and for take profit can be set as explained. I hope you have got the idea about buy trades. Now, let's go over 2 quick sell examples to show how this indicator works in bearish conditions. First up, the orange diamond method. Here, we see the trend line flip from green to red, the cloud is also red in color, and an orange diamond appears. That's our confirmation that momentum has shifted in favor of the sellers. With the red trend line and the diamond signal aligning, we enter a sell trade right after the diamond candle closes. Stop loss goes just above the recent swing high or above the cloud, and for take profit, you can either go for a fixed target or trail the stop using the midline as the trend continues down. I hope you have a good idea about this method. Now let's look at the second method that we can use to open sell trades using these indicators. This one's based purely on resistance from the cloud. We're already in a downtrend with a red trend line and red cloud. The price pulls back and touches the lower edge of the cloud, which is now acting as dynamic resistance. Right after touching the cloud, price gets rejected with a strong red candle. That's our entry, so we will open a sell position over here. Again, stop loss could be set just above the cloud. And for take profit, same options, either fixed or trailing. These 2 sell setups show how versatile the gradient trend filter can be, whether you're using reversal confirmations or trading straight off cloud rejections. If you found value in this video, hit that like button and consider subscribing for more content like this. Thanks for watching till the end. I'll see you guys in the next video.